Did it work? I think it worked. What's up, everybody? Welcome to a much delayed Zach's live trader here. Having some issues, major issues with YouTube. I don't know if anybody else is having problems, but it has been frustrating here with YouTube. First, I couldn't even log out of my personal account so I could log into the live trader account. I was getting an error 502 whatever HTTP error trying to do that, and then the encoder wouldn't even start for the preview, and then the preview stream wouldn't work, and then the stream would, I mean, it's all this stuff going on. So as long as we're going on right now and it's up, good. I'm happy. As long as we're rocking and rolling, that's all that matters. What else do I need? I need my Epic pen. That's what I'm missing here. I need my Epic pen, and we'll go ahead and get rocking and rolling here on Netflix. You know the drill, ticker NFLX. So if I'm randomly running around loading stuff up here, I apologize, guys. I just, I've been spending the last 20 minutes trying to get the stream going instead of prepping myself for this. So a little helter-skelter to kick things off, but that's okay. We made it. All right, and what have we made it to is Netflix. So as always, why don't we kick things off with the price, consensus, and EPS surprise chart here on Zax.com. Remember, guys, I am live right now. There's a little bit of a delay, so I'm going to ask you guys, since we've had some issues with the stream, that if it goes down or something, shoot in the chat that it went down, just so I know. Because if this is going a little bit screwy this morning, that's just going to be par for the course. Okay. So anyway, so the price, consensus, EPS surprise chart here on Zax. Black line corresponds to the right y-axis, which is price. And as we talked about last week, the left y-axis here is EPS. So these multicolored lines here represent the evolution of our Zax consensus estimates over time, and these coincide with this left y-axis. The green arrows are earnings beats. There are no red arrows. Pretty remarkable when you think about it. So Netflix has not missed earnings since Q3. Well, this is really, the Q2 earnings of 2012. So that's a long time that they've been consistently beating. These estimates looked a whole lot better. Big growth heading into 2014, and then all of a sudden it was, actually. And I think in 2014, this is when they had some big content deals where they were getting stuff for a lot cheaper. And then all of a sudden they had to renegotiate a lot of that, and certainly changed the trajectory of their EPS. However, what have you done for me lately? And if you look here, 2016, EPS numbers under 40 cents. 2017, we're sitting here over $1. So huge EPS growth, and more importantly, as far as I'm concerned, is the trough and then up. Right, so this kind of troughed along with that, and then since then we're on the way up. Now, I was doing a little bit of light reading into some of the analysts and what they had to say for Netflix, and the original content is obviously a big deal for them. I was kind of tickled, though, because in that original content, they named Master of None as one of the 3 big things. Now, that's the Aziz Ansari comedy thing. And there's a lady in there, Denise, who plays like his friend, who went to my high school, was in my high school English class. And she helps write that show. So it was pretty cool to see that. Some famous alums out there, so that was cool. And then the summer league, Cassidy Hubbard is on the court with everybody, and she was a year younger than I was at my high school. So lots of alums doing big things. I don't know if it's quite as big as Zach Live Trader, but I guess they're doing okay. All right, let's go ahead and flip to the detailed estimates page here. on Netflix. They are Zach's rank number 2 buy right now. Value style score of F, well, yeah. Growth style score of D, which is surprising. That's very surprising to me. We'll see why, but they're going to report after the bell today, so we don't have a lot of time. But I wanted to get this done the day of. A little frustrating that, had a little bit of a failure to launch there early on, but looks like we're up and running. We'll see. Hopefully the stream doesn't drop out on us. Bottom 36% of our Zach's industry rank, but who really cares about the rest of the industry? So this is surprising. I don't know how their growth number is so bad when you have 31% current quarter revenue growth. Next quarter looks like 25. Current year is 27.86. Next year numbers do reel it in a little bit to 20%, but translate that to EPS, really getting much more efficient on the EPS side of things. 73.86% growth for the current quarter. Next quarter looks like 83.89. Current year number 144.87. That's huge. But we saw that, down in the 40s for last year, and then now we're looking anywhere between $1.28 and 92 cents. And then next year's number 87.87%. So still huge runaway growth numbers here on Netflix. Now, what's happened recently? Just over the course of the last week, you have analysts that have come out and increased their EPS estimates for the current quarter, next quarter, current year, and the next year number. But doesn't mean it moved the needle. And basically Netflix has been stuck at 16 cents for the current quarter, 22 cents for next quarter, 105 for the current year, and $1.98 for next year. So not too much in the way of these estimates moving around. While they are positive, they're not really moving the needle. So just like a little, they're just inching it. But it is surprising that they would come out the week of earnings and do that. And then the surprises, a couple pennies, 6 cents, 7 cents, 4 cents. So 4 cents on average over the course of the last 4 quarters in a row. So expect a small surprise out of Netflix, is what I would tell everybody. So there you go. Oh, that's right. Remember, I was telling you, I'm sure I'm going to forget a little something. So let's go ahead and pull up our free stockcharts.com. Remember, you have to use Internet Explorer, I know, because I use the Microsoft Silverlight plugin. All right, let's go on the dailies. JP Morgan, we'll deal with that later. Netflix. So what's happened here on Netflix? I had this fib set up from back in the day. Let's get it proper. Let's get the proper fib set up in here. And wouldn't you know that the stocks come down. A little bit of support at the 61.8. Resistance at the 23.6. Support at the 76.4. And then now it's basically got pulled right back to that 23.6. Interesting how that works. These fibs, especially larger stocks like Netflix, they definitely have a tendency to hold true. So we're right on that fib. That's surprising that day of earnings we get right to there. Look at the move that Netflix has had. Just since the beginning of July, it's already gone from 145 all the way up to the 160s. So over 10% in a very short period of time heading into this earnings report. And then, of course, the highs, we'll call that 167. So the good news is we've got lots of areas, lots of prices, lots of fib support that we can evaluate this options chain with. So that's good. Good stuff. All right, so why don't we go ahead and go to the nuclear weapons. And that's here in the estimates. Consolidated surprise, where we could see what has Netflix been doing on earnings. Last couple of quarters, a whole lot of nada. But for 3 quarters in a row, this thing was whipping all over the place. -15, -12, +17. Now, if you notice, don't care about EPS, right? Nobody cares. But what do they care about? Likely. Here's a revenue disappointment, disappointment, upside, and then we're getting a little mild here, right? So I think, as with some of the other companies out there, rather than being worried about EPS or strictly being worried about their revenue number, that you look at Netflix and you say, okay, well, where is the user growth overseas, right? Because we know what's happening here in the U.S., but if they can expand overseas, get into international markets, that's going to fuel a ton of growth for them. So that is definitely going to be a key metric to keep your eye on during tonight's report. Let's look a little further back and see, and then again, some big moves, 15s, 17s, 21s, 19s. Big moves for Netflix. Let's get to the options chain. Now, this is probably going to be among the most entertaining of these that we do all year, right? I feel like Netflix, Tesla, who else is usually good? I mean, Amazon used to be great, but that's just so big. I feel like Netflix is one of the main events. 160s. So let's see where we're at on the 160s. Lots of people playing this. Plenty of skin in the game. The at the money call is trading 705 by 740. Let's just call that 720. Let's just call it 720. No, I want to call it 725. 725. That's right. I don't want to make it 727. I'm 727, fine. At the money put is 610 by 620, so we'll call that 615. That's 1342 divided by 160. Still looking for about an 8.38% move here in shares of Netflix. I think you guys could tell my calculator, man, my keypad game is a little whack this morning. I'm hitting 2s and 3s, and man, what's going on, Dave? I've been trying to be so I gotta let you guys know, I've been trying to do this thing where I don't drink coffee in the morning. I don't know how it's working out. I switched up the diet a little bit, feeling pretty good, losing a few pounds. But the coffee thing, maybe I'm being silly. Maybe I shouldn't give away the coffee. I don't know. Oh, anyway, 8.38% is where we're looking. So about $13 holler out of Netflix. So at 130, $13 to either side. So they're talking here, and then the stratosphere right over here, not even on the screen. So down in the 147s, I mean, I think if you're looking at that, you got to say that might as well be 145. I do think that's probably the outer ledge of a reaction on Netflix. And then a little further. I mean, I do like coffee. I don't really load it up with a bunch of cream and sugar or anything. I just drink it black. But I think part of it is I'm trying to like help my girl out because she's, you know how girls are, right? She like doesn't want to. I don't know. She thinks she's getting chubby or whatever. I think she's just fine, but she thinks she's getting chubby. So then now I'm like, all right, I'll support you. So then I'm eating all weird too. It's not super weird, but I guess it's healthy. Like, I'm not eating a lot of, there's like no bread in the house. It's all collard greens and spinach and chicken and stuff like that. Fruit, of course, a little bit of fruit, but The coffee thing, I'm trying to get her to not have, because she has like a lot of coffee. So I'm trying to ease her off of that a little bit. So I don't know. We'll see. Anyway, I digress. So 147, 145 downside. Okay, let's dig in this options chain. Let's see what the market's giving us. Yeah, Danny, I drink it hot, black, and strong. Well, to Josh, I'm sure that dudes are the same way. Like, think that they're getting fat, and then all of a sudden they gotta switch everything and have insecurities. Just about insecurities. So I think male or female, they have insecurities, right? But anyway, all right. So let's go. We definitely know we're going to be playing around here in the lotto, right? Because that's what we're here for. But let's be a little bit more conservative when we're putting together a little something else. Now, guys, the thing about this market, now I got to talk about this market a little bit and what this market's been giving us. So this is when we're going to go back to the JP Morgans of the world, right? So JP Morgan, we're actually successful with JP Morgan. Even though, this is why I like selling out of the money spreads, because even though you're wrong, you're still right. So this is in fact a bullish trade on JP Morgan by selling this out of the money put spread. But we didn't need a bullish move out of JP Morgan. We just needed a not so bearish move out of JP Morgan, right? So as long as it kind of hung up here, we were fine, and it did. It has so far hung up there, so that's good. But even with a decent report, And the other thing with JP Morgan is, again, we had this big run up into earnings. But perhaps the week before earnings, getting a little bit of a sell-off, maybe that was a clue. The reason why I'm drawing that parallel is just because of the run-up that we've had in Netflix here. So it always makes me nervous when we get a huge run in something that maybe, it's just out of gas. But if you're looking for a reason to fill a gap and to get to all-time highs, a good earnings report is a pretty good reason. Is that all-time highs for Netflix? I don't know if that's all-time high. Yeah, okay. That is all-time high. Okay. So because this run's happened and it hasn't relented, is better, I think. So that's why I feel a little bit different from that. But let's look at Pepsi now. So Pepsi beat us down that first day and then now has been trickling up a little bit, right? Dark, murky, and picked up at a gas station. Now we are talking about my ex-girlfriends. Hi-oh! Oh, just playing. So Pepsi came under pressure early on, and then now has started to rally back a little bit in the face of that report, right? So I guess the thing is, what I'm trying to get across here is, it's not so easy. Like it's been frustrating because these stocks aren't behaving properly. Right? It's like they're not doing what we would think they do. It's like, oh, you have a good earnings report, you should go ahead and just kind of trickle higher, and then it's all good. And that's what I was talking to you guys about, that maybe some of these institutions, I think, are trimming positions. Like they got a ton of liquidity during the earnings report, so they can get in there and they can sell off some of their holdings, drop down some of their risk, and do that. Right? So that's what I think might be happening. So it does make me a little cautious heading into this report. Okay, so anyway, so if we're talking about selling these spreads, I'm comfortable doing that with a bank like JP Morgan. I'm not comfortable doing that with a stock that has the beta of Netflix. I mean, this is crazy. Since April 19th, it goes from 130 to 160 to 153 to 166 to 147 to 159, basically 160, down to 144, and now it's back at 160. So that's a lot of whipping around. And while you are compensated for that by the inflated option premium that you see in here, it's very risky business, I think, selling credit spreads on a stock like Netflix. I think its propensity to move actually helps you out if you are, in fact, long one of these spreads. So I'm going to go long on both of these, showing a call spread and a put spread. And then our lotto is going to be in that front week because I think we can make some serious money in this front week. Okay, so 818. So the 160s on a call spread, of course. And now the market is pricing in almost 175, right? It's 173 is where the market's pricing in. So the market wants to get in there. I like to do the halvesy, but then there's no halvesy on this one. So it's a little frustrating. But if you're looking at the chart, back to the chart again, to this upside, this is what you got to ask yourself. If I'm bullish on Netflix, well, do I want to be so bullish that I think for sure it blows on through this? Or is there a possibility that it gets to this and kind of, stalls out? Because that's right in between your 165 and your 170. And your payoff for a 165 versus a 170, it's going to be different, but it's not going to be that different. But we are going out to August, right? So let's do this. Let's do the 160, 165, and we're going to price out a couple of these. So going along the 160 call is going to cost $880. Simultaneously going short the 165 call, you're going to get back $645 of that. So the net outlay here is only going to be $235. The difference in the strike prices is $5 minus that $235. You can make $265 on $235 or 112%. And all you need to have happen is Netflix to close at or above 165 at expiration. 112%. Now, if we were more aggressive and decided to do the 160, 170, of course, it would help if I didn't cover up the numbers so everybody could see. There we go. 160, 170. That again, 880 is going to be the cost of that 160 call. Simultaneously going short the 170 call, you're going to get back $445. So $435 is going to be your net outlay on this one. Now the difference in strike prices is $10 minus that $435 is $565 you can make on $435 or 130%. So this brings me to this thing where I go, to go from here to here, you're going to get 112%, right? And then the extra risk, essentially, of another $5, you're only going to get another 19% potential. Not really worth it in that case, is it? It's not. I don't believe it is. Granted, when if we hit a 160, 170 call spread and it hits, I look like a champion. And that's good for my ego, especially recently, right? But I think what makes more sense is just looking at the two of these. This 160, 165 call spread. So I'm going to officially say that the bull debit is the August 18th, right? 160, 165 call spread. No, you're not buffering, are you? I'm not buffering. Health is good on my end, Kurt. It's probably just YouTube being bums today. Call spread for 235 net debit. So that's the bull debit. Now the bear debit, also at this 160. And then we said that that market wants to get all the way to 145. And you guys know I like the halvesy. You know I like the halvesy. Now, on this end, I think that if you're going to be bearish, that you can be more aggressive. And I think you can go for the gusto and try to get that 150. Get this calculator over. The silly part about this new calculator they put in Windows, it's like you got to get it just right. So if I click here, it won't move. I have to get over here for it to move. Oh, no. I have to get over here for it to move. It's silly. Anyway, so if you're long the 160 put, it's going to cost you $7.50. Simultaneously going short the 150 put, you're going to get back $365 of that. So here's a $385 net outlay. But the difference in the strike prices is $10 minus that $385. $615 is what you can make on $385. So this one's good for 160%. So this is a really big victory here if this one happens. But I think that given what we saw on the chart, you know, if it's not a good report, 150, no problem, 150. So bear debit is the August 18th, 160, 150 put spread for I already forgot what the number was. 750 minus 365 for a 385 debit. Okay? Because if it gets bearish, it's going to be bearish. It's not, they're not going to, you know, they're not going to just go, oh, okay, well, we're just going to come in here. No, man, they're going to pound that thing down for sure. For sure it's going to give back a ton of what it gained. It's got to. And again, this did hold. This held too, ran out of gas, didn't hold, and now here we are, okay? Overall trend though, you have Netflix in a consolidation, then it found its legs, now it gave some back, but did that buck the trend? Because it did have this negative trend channel it was starting to get in, and then it bucked it. So that'd be interesting to see, I think. All right. So I think the trade that pays here on Netflix is going to be in the positive direction. Why am I so bullish? I feel like that's 3-4 in a row where I'm like, nope, bullish, nope, bullish, nope, bullish, right? It's just because of earnings. They've got solid earnings. And they're likely to continue to have solid earnings. Things are pushing in a positive direction, and Netflix is a company that's disruptive and is changing the world, right? The way the world consumes video. And they are trying to get that international presence right now. So they're expanding in the right way. But we'll see. And you know, I do, and I get in these, I talk about this kind of stuff all the time, where it looks like lower highs. So this is exactly what was happening in the S&P. So you get this downward channel in the S&P, and when it breaks this downward channel, I say, yes, this is the buy, right? But then other people wait for the all-time high, and then go, okay, now it's a buy. Well, if you're buying here, you already missed all this. So for me, I'd rather just break the trend channel and then go long. The same thing happened It's another one we talk about a lot, or I talk about a lot. Dollar yen. Trend channel. They broke it. They did us a little rope-a-dope though, right? Along the trend channel. Boom. Now, Mr. Wallace, I like you on your Cody thing, but this is the thing about it is, though, maybe like those in the know will mess around with Cody. And then now with all these Fire Sticks being sold, right? But you know how many problems they're having now because like that you can't get Exodus doesn't stream anything because everything's getting shut down because all these Fire Stick owners that put Cody on there, they're cracking down on it. And then how many of those people are going to have the wherewithal to get out there and install a new add-on and, you know, find a new place to stream within Cody? So that's for the more clever people, and pirating is kind of always going to be there. I don't think it's going to make or break Netflix. Absolutely not. And then again, Netflix here. Earnings report, I do believe, is all about those new subs. Absolutely. Absolutely. Okay. Let's get it in here. Lottos. Ooh, lottos. These are priced. These are pretty expensive, if you think about it. So essentially, this 172.50 is where the market is pricing Netflix on a positive move. And it's still going to cost you $200. I would never tell you guys that like the Elysium add-on is something to look at. I would never say that. I would never say that Elysium might be an option instead of Exodus. We would never say that. Anyway. Okay, so 172.50. Kind of the top end of this. This just seems like very expensive for us to light on fire, right? But there is another way to do this, folks. And the other way to do that is rather than just buying an outright lotto ticket, right, is you can get very aggressive with an out-of-the-money call spreads. So if you do like, I don't know, what about this 170, 175? That's still going to cost $142. See, that just doesn't seem that attractive. These out of the money, I'm sitting here trying to price a very, very attractive out of the money call spread, and they just don't have it. Lottos are going to be tough with this. I think you can say just be more aggressive. That's still going to cost $560. That's still a lot of money, even though you could triple up on that one. It just seems rather expensive to mess around out here. But 10% gets you here. I think that's what lottos are supposed to do. So I would just wait. I wouldn't. Unless you get, because when we're talking about these lottos, we're trying to get them under $100, right? So 142. That's gonna cost. That's obviously a little bit more. If the stock moves 10%, it would have to move 10% to even put this in the money at all. And then so anything to the upside, right? What about the downside lotto? Again, I was saying 150s, and look, you're still paying $200 for the 150 or the 145s. Still $143 for the 145s. So I would pass on the lotto if I were you guys. Just too expensive. Unless somebody's comfortable with, spending $284 on a 170. That's not a terrible idea, but I wouldn't even call that the lotto. So what would we say, the pseudo lotto? How about that, pseudo lotto or little lotto? Little lotto? We'll just call that the 170 call. Right? I mean, very aggressive. Probably not going to happen. But if something crazy happens, it's going to be great. Right? I would just wait. Just wait till the morning after. Because it's happening tonight, so you don't even have to wait that long. And in the morning, the plan is to just basically fade any move. Because I wouldn't be surprised if they do this to me one more time. If they do the thing where they have a good report and somebody finds some number, and you'll see it too, like the numbers will be great, the stock will go down, and then somebody on Market Watch is going to come out and be like, oh, well, the stock was down because of the subscriber growth in Turkmenistan. And then the stock would be down, and they have no idea what they're talking about. Like, that's not why the stock is down. The stock is likely down because, there's big institutions that are shedding some weight and cutting some risk and using earnings to do that. So if this happens again with a Netflix, then it certainly is a trend that's developing, and that's going to influence the rest of my week for sure. Okay? So keep an eye on that for tomorrow morning. Look to fade a big dip, I think. If there is a dip, look to fade it. If there's a spike up and it doesn't get above this 167 level, look to fade that too. So if they spike it up to here and it stalls out, then that's telling you even on an earnings report it doesn't have the strength to break through, then that would be a move to likely fade. But if you're long the 160, 165, you rip it. You rip your long call spread first, and then you look to fade the move. Okay? So that's a game plan for tomorrow morning when you're looking at this thing. The game plan heading into that. And there you go. So, guys, I apologize for the delay. It was Netflix. Netflix was being weird. I don't know. Hopefully it's worked itself out, and tomorrow's all good. I already shot out the email to everybody about the streams for the week, so should be fun. I'm looking forward to. So it's Qualcomm tomorrow and Skyworks on Wednesday, I believe, both at 1 o'clock. Thursday, I've got the GBU. I got to do some stuff Thursday morning, so I didn't schedule a video for Thursday morning, but I have the good, the bad, and the ugly on Thursday afternoon. And then Friday morning, we'll do the morning after on Friday morning. So we'll see what happens. Hopefully, we get a few of these right and are able to make a few bucks here. I'm really starting to like more of this, morning after kind of stuff, to come up with a quick little game plan on for the day or something like that. So always evolving, guys. You know how it is. So I will see you guys in the chat room. Again, shoot me emails, livetrader@zax.com, or you can ask me stuff in the chat. Let me know what you guys are looking at for next week. Next week, we already are talking Google, or Alphabet, and AMD. So I've got those both on the radar. And let me know what else you guys want to see. And now I will get out of your hair. So everybody, have a fantastic day. Good luck on Netflix. And I'll see you all mañana. Have a good one.